بسم الله الرحمن الرحيم والصلاة والسلام على رسول الكريم. السلام عليكم ورحمة الله تعالى وبركاته, and welcome to Fiqh al-Muamalat online course. And today's topic we'll be talking about the Islamic financial intermediations in the financial system. So briefly, we have to understand that the current Islamic banking business model is based on financial intermediations. Of course, there are different views. What's the best directions of the Islamic finance could be based on a trading house or an investment house or an investment banking or enterprise banking. So there are a few ideas and few thoughts how to redirect the Islamic financial institutions and what's the best approach to design and structure the business model. But as of now, in the legacy of the early generations, we are within the Islamic banking activities based on the financial intermediation, meaning al-wasat al-maliya, meaning Islamic banking is acting within the financial intermediations by observing, of course, the Sharia rules and principle in offering that kind of business. Let me highlight a few points within this context of the financial intermediation. Number one, the Islamic financial system, of course, is governed by the Sharia law, meaning that, number one, we agree that the business model is a financial intermediations. It's wasata maliya. But despite this wasata maliya does exist in the offering of Islamic business product and services, there are some points that this financial intermediation is subscribing to. Number one, Sharia law is the law that governs the business model, meaning you act your financial intermediations within the Sharia law. You have to comply with the Sharia law and regulation. The point number two is that the sources of Sharia, the primary sources and the secondary sources, and the other aspect of it, such as the maqasid, the Sharia, legal maxims, and so on and so forth, are representing as well the sources of Islamic finance, because at the end of the day, Islamic finance is part of Sharia. So the same rules of sources of Sharia law are applicable to the Islamic finance where the financial intermediation is operating within. The other point is that, as we mentioned, Islamic finance is one of the Sharia aspects, meaning that when you look at the Islamic finance structure, or when you look at the Islam, the religion structure, or the Sharia structure, if you want to go directly to the law, Sharia structure, so you have fiqh al-ibadat, you have fiqh al-muamalat, and fiqh al-muamalat, you have different sections of law, and you have the section of al-buyu'a, which basically the foundations of what's so-called Islamic banking and finance. So at the end of the day, Islamic banking or Islamic finance is one of the Sharia aspect, is one of the chapters of the Sharia law. So meaning that we are talking about buying and selling in the traditional market, or buying and selling in online platform, or buying and selling in the context of banking, or buying and selling in the context of a regulated market, you are still under the scope of bay'a, which is one of the chapters of fiqh al-muamalat, one of the chapters, one of the aspects of Sharia. So even Islamic finance industry, Islamic economic and Islamic finance expand as much as you can imagine. At the end of the day, it is still chapters of Sharia. It's still one of the Sharia aspects in doing business and finance. And as a result of that, again, going to the previous point, the sources of the Sharia law rules and principles are applicable to those transactions as well. It doesn't mean being in business and finance or being a regulated market, you will having exemption from escaping from those rules and requirements of Sharia, as long you carry on financial transactions based on lease or sales, you are still governed within the Sharia rules and principles. The following point is that the Islamic banks involved in trading within a regulated market. So this is the tricky part, not really tricky part, but this is a point to be well understood. So 2 points here, or you may say 3 points. Number one, the Islamic banking is operating within the financial intermediation. Number two, the Islamic banking is operating within a regulated market. Number three, Islamic banking is unique trade-based, and others of course, trade-based instruments within the financial intermediation. That's how it should be understood, meaning that in a normal market, traditional market out there, traditional market that you every day you do your daily shopping, you do buying and selling. So you do buying and selling based on traditional way, whereby you see the sellers, then you see the commodity, you give the money, pick up in plastic bag and go, or paper bag, more environment friendly, right? Now, when it comes to Islamic banking, it is the same. Buying and selling, similar to what you do out there, but sometimes you don't see the commodity there. So here, some additional features has been introduced to meet the environments of the financial intermediations, whereby constructive possessions, has been become an important aspect. Constructive liquidations, for example, and payments through system, through gateways, through e-wallets, through online banking. So things has been emerged in doing the trade and business, which is a little bit in the form or in the substance, by right, in the substance, similar to the traditional market. You buy, you sell, you do leasing. Same in the banking, you buy, you sell, you do leasing. So substance is the same, but in the form is a bit different. In the form, traditionally, you see the seller, you see the commodity, you pay, you take it, it's in plastic bag. But a regulated market, you may buy stock, you may sell stock, but you may not see exactly the commodity because it's a bit different. Sometimes it is in a virtual form, but it is understood by specifications based on whatever asset you are going to buy, and the payment could be through online transactions, and you don't know the buyer, the seller exactly, but you know the institutions. But one of the officer will represent that institution in transacting that sales. In traditional market, there is no rules how to conclude the deal as long as it is Sharia compliance. But a regulated market, because it is regulated, there are some standards, guidelines, and so on and so forth you have to comply with. So the point here I'm trying to highlight is that the financial intermediations use trade-based transactions and others like lease-based, partnership-based, and so on and so forth, but still within the financial intermediation, still in compliance with the Sharia rules and requirements. But what has been done, the form has a bit adjusted and enhanced, and the contract has been used enhanced features which are also a Sharia compliance, like the possession, for example. We are not talking about the physical possession, but we are talking about constructive possessions. The ijab and the qabul, it is it's expressed verbally between you and the buyer. Now, the offer and acceptance has shifted to clicking the icons. So the offer is presented like online transactions, Amazon.com, eBay, Lazada, Shopee, and so on and so forth, or some hotels that they provide their services, or some airlines if you want to buy a ticket. So you present their offer and display it and filling up the informations and clicking. That's the course of concluding the acceptance in order to finalize the financial transactions. So as I mentioned, the substance is still the same, but the form, the way that you carry on the transactions has been a little bit shifted and adjusted to suit the new environments, which is more related to online banking, to digital economy, to more sophisticated ways to conclude the transaction, but the substance where the Sharia rules and principle are still relevant, still applicable. The other point I would like to highlight is that Islamic banking, of course, changed their business status on selected model. This is a very important point that we should understand. In doing the financial intermediations and in the offering, conventionally speaking, in the conventional banking, you always see the financial institutions as a lender. Most of the time, you will see it as a lender. Maybe except only in the deposit side, when you will see it as a borrower, or the fixed deposit, you can see it as a borrower. But mainly in the financing and the facility and the loans, the conventional banking is always regarded as a loan providers. But when it comes to the Islamic banking, within the financial intermediation, you see that the Islamic banking taking different positions. Sometimes the bank is a seller, sometimes the bank is a buyer, sometimes the bank is a lessor, is a leasee, is an agent, is a principal, is a broker, is a capital provider, is a mudarib, is a partner. So different position changes because of the positions of the contract. So when you introduce a contract and you engage with the customers, so the relationship between the customers and the bank, and also in addition to the nature of the contract, will determine the positions of the bank. If it is, for example, in murabaha, the bank will be the seller. But sometimes the bank will be a buyer as well. The bank could be agents, could be a principal, and so on and so forth. So this one, rotations in the positions of the financial institutions within the financial intermediation may change, depends what kind of contract you have introduced and determined, identified to conclude the financial transactions. And the other point is that Islamic banking, they don't use loan. This is a very common mistake which sometimes disturb me, and I think disturb many of Islamic finance practitioners as well, whereby use a loan, Islamic loan, a personal Islamic loan. This one is actually not appropriate. So we have to use the word financing, Islamic financing. We don't use a loan. A loan doesn't exist in the facilities of Islamic finance. Loan does exist in the conventional one, but Islamic one, there is no loan that operates as an instrument to make money and generate income and accumulate wealth, because it's not allowed. Any return coupled with loan will tantamount to riba, which is not allowed. But instead of loan, there are some different facilities or financing facilities which are based on a different contract, not loan, different contract, such as mudaraba, musharaka, istisna, salam, ju'ala, and so on and so forth. Ijara, but there is no loan there. So the loan is not used in Islamic finance, but sometimes it is used, the qard hasan, precisely, the qard hasan, it is used to structure some Islamic banking facilities, some structured product, yes. Sometimes the loan is used as a part of the structure to facilitate some offering, but it is not used as a main contract with the clients to identify him as a borrower and determine the financial institutions as a lender. No such thing in Islamic finance. So Islamic finance use Islamic facility, and we shouldn't call it a loan or Islamic loan. We should call it Islamic financing or Islamic facilities or Islamic services. And the facility will be determined according to the contract selected. And based on that, the bank will take its position and the client will take its own positions, but there is no borrower and there is no lender. It could be there, but just as an additional supporting contract to design some products and services. This is a very important point. Whereas in conventionally, definitely they are mostly driven by providing different facilities based on loan. Now, when we go to the overall, which is the last point I would like to highlight in these sessions, when we look at the Islamic facilities or Islamic finance, product and services, you will see them that they are based on different principles. As I mentioned, there is no loan, but what we have sales-based principles, we have a profit-based principle, we have a lease-based principle or contract, free of charge or fee-based principles, and we have supporting principle or supporting contract. The sales-based principle or the sales-based contract or the sales-based facility, which include like sales, مضاربة, مرابحة, تورق, سلم, استثناء, BBE, استجرار, وفاء, and so on and so forth. All البيوع, the list of البيوع, that we are going to highlight, will be parked under this category. The other one is a profit sharing like مضاربة, مشاركة, مزارعة, مغارسة. All a profit sharing base will be parked under this category. Then we have the lease, which is the إجارة base. We have إشارة تشغيلية, we have إجارة منتهية بالتمليك, and we have إشارة موصوفة في الذمة. All these types of إجارة will be parked on the lease category. Then we have a fee-based classes or contract or facilities or principle, let's say wakala, like Joanna, which is commission, will be parked under this. And we have a supporting contract or supporting principles or a security contract like kafala, rahan, and hawala, and others. And of course, you may add also the free of charge, which is the qard hasan, as a principle that can be used not to generate profit, but to support some of the financial transactions. So we have around 6 classes or 6 clusters that can be used in Islamic finance facilities and product and services, and each one it has a long list, or sometimes so some of them a limited list of the contract that could be used in offering Islamic finance product and facilities. Some of them as a core contract to generate revenue. Some of them are supporting contract to make the facility perfect. Some of them are additional and complementary to make the contract perfect, but it is not the main driver of the facility. So this is, overall, the Islamic contract that we may discuss them in the future. And with that, inshallah, come to the end of this session and try to see you soon, inshallah. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.